taking a vacant piece of land and turning it into a new project just creates so many different, more variables of risks and time and cost. If you don't know what you have, it is kind of a 50-50 crapshoot.
It's much easier for a buyer to walk away from a deal than a seller, because the seller still has the property left to deal with.
I do see quite a few red flags with sellers making statements that are fluffing. It's just been a weapon that a lot of groups have used to stop development because they just don't like it. More investors and capital partners and even some REITs are kind of eyeing California again for development because of this reforms.
All right, so welcome to our podcast here, Dirt to Dollars. Today we're joined by Patrick Stelmach, who is a real estate agent and specialist in land development over at CBRE, and joined their team, about a year ago or so, something like that?
Yeah, I joined in March 2024 after a decade of brokerage elsewhere.
Okay, yeah. So, and Patrick and I have sort of known each other indirectly for a long time, but recently connected over his new specialization in land development and just starting to ask some questions. So this is an opportunity for us to kind of just discuss, what it's like from your perspective dealing with land, and what sort of issues that you run into, and how we collectively solve those issues. So, you want to give me a little bit of a background about how it's been, your experience over at CBRE, getting more entrenched into land development since you started?
Absolutely. Thank you for having me, Chris. It's great to reconnect with you after all these years, the power of LinkedIn networking. So
Yeah.
I have been working in real estate, seems like all my life, but in having worked previously with multifamily investments and doing urban core properties and redevelopment projects, and then getting into the most complicated form of commercial real estate, which is taking a vacant piece of land and turning it into a new project, just creates so many different, more variables of risks and time and cost. But the complexity is what really interested me in it, and just kind of, and through my experiences of traveling around the United States and in other cities and seeing how they have grown to be more dense and urban and more interconnected, I came back to Sacramento, seeing an opportunity to kind of use what I've learned and see how we can rejuvenate this renaissance, this urban renaissance, and looking at other cities all across Northern California that want to be curating a more retail, walkable experience and more intense density has been really exciting, and has been really challenging with the recent rise of interest rates and construction costs and all the different environmental laws. So there's, I think, mixed narratives around the opportunities and challenges with land development. But we're in a housing crisis, we're in an affordability crisis, and our population is continuing to grow in California overall. So there's just this insatiable demand, this unmet demand for more housing, both single family for sale as well as rental apartments. Rental homes now are becoming increasingly popular. Meanwhile, commercial and retail amenities to support that housing, job centers are still important, even though it's more of a work from home is increasingly popular. So we're seeing all different kinds of new trends in housing types. But I would say there is a lot to kind of move forward to try to get our housing back on track in terms of housing production.
Yeah, that makes sense. You touched on a point earlier that I'd like to just get a little bit more feedback from you, and that is the walkable communities. Now, as a planner, I'm trained to think like that, but from your perspective, dealing with buyers and sellers of land, why is that important?
Like with everything in commercial real estate, it's really driven by demand and users. So people, I'd say 40, 50 years ago, valued more space and having their own kind of white picket fence. And and over the past 10, 15 years, there's been a huge shift towards demand to be able to walk to your local coffee shop, to be able to walk around your neighborhood, and more pedestrian access. And uh, it kind of increases your livability. We're in a kind of loneliness epidemic as well, some people would say. So, kind of having more social interactions is like really important for people. Uh, so I would say even in suburban environments, there's a demand for that. So people want to have the security and have the quality of schools, but they also don't want to be just stuck in a cul-de-sac. So I see we're seeing those kind of changes in land development patterns and kind of more making more suburbs more urbanized and kind of redesigning some of these neat communities to have kind of town centers as they kind of call it.
Yeah.
So
And I'm curious, final question on that vein of thought. Do you find that it differs between demographics, like older people versus younger people? Because I know there's a lot of empty nesters that are now, they're becoming a really big part of our population.
absolutely. I mean, I think like for instance, like my mom, my parents, they uh, have this shift in their lifestyle where they're in a house that's just too big, is just too much to maintain, and they've kind of reassessed kind of what does it mean to retire in place. It's a
Yeah.
big house in the middle of the burbs, so either so older people are either looking for ways to sublease parts of their house, split the house, or do an ADU, and then rent out their house and have a smaller quarters, or is often the case, they'll downsize into a smaller unit in a more urban context. I would say younger families now, especially during COVID times and post COVID, have kind of have moved out of cities and want to be in an area where they have a garden where they can, kind of have some more elbow room. And so it's, but as the much younger professionals, in their 20s, early 30s, still really prefer to be in a rich amenity rich nightlife area. You won't find very many young working professionals living in the burbs unless they have like that's where their job takes them. But yeah, I would say it's changing demographics of our urban landscape, definitely. And that's kind of one of the reasons why I kind of came over to CBRE, is that we have this huge national platform and a huge robust research department where we track all of these trends across asset classes, across states, and we're just kind of on the cutting edge of where the market is. Where is the puck going? It's much easier to end up with a
Yeah.
large national firm that has these resources. And so I have the ability to specialize in land, and I work with our multifamily investments team. I work with our retail investments team, and as well as our office teams, who have clients who may own a shopping center that may be rezoned for residential, or even with recent new laws, commercially zoned properties can be used as affordable housing by right.
I'm curious about what percentage of your buy sell listings these days are in Greenfield areas versus infill.
I say my work has predominantly been for the past 10 years in the urban infill. So I'll say it's probably about 90% infill and 10% greenfield. I'll say that's changing where, now that I have the ability to work with teams across California, I'm working on projects from Lake Tahoe, the Nevada border, even some projects in Reno that are like greenfield development, to up and down the Central Valley, and as well as into the East Bay area in Solano County, Alameda County. But I would say predominantly my work kind of revolves around uh, urban and suburban infill, but in more traditional greenfield development, like single lot subdivisions, is a big part of what CBRE does, and uh, we have those specialists as well that focus on the single family lot market and
Yeah.
selling paper lots and things like that. But in terms of the work that I enjoy most is kind of the really complex infill
Yeah.
sites.
Yes. Okay. So, on that vein of thought, let's kind of dive into what is, in your mind, most important about the due diligence process to really get what you want. How do you start with your clients and helping them think about development?
Absolutely. I think feasibility studies and the initial uh, due diligence that a property owner can do can really help set them up for success if they're looking to sell their property, or if like an owner owns a property and they're looking for capital partners to go into a project with them. Uh, yeah, these kinds of initial studies can add tremendous value because it just speaks to the authority and credibility and confidence that you can actually build what you think you can build on it. If you're just looking at a vacant piece of land, just because it has a certain type of zoning doesn't actually tell you that much about what you can build on it. It requires really looking at uh, the zoning allowances and constraints, the CEQA status we'll talk about, I'm sure,
Mhm.
kind of the permit timing and kind of what is the approval pathway and kind of what are the environmental or legal risks. And so working with a consultant and a team that can help you assess that uh, can really kind of help you get to a really more defined net developable area, figure out what the site can yield in terms of a number of units, how big of a building, and how valuable that building that you can build will help you inform what the land is worth today.
Yeah. And essentially, you're talking about highest and best use, right? So when you start with a new client, let's say it's a property owner and they're looking to sell their property, I would imagine that the most important factor for them is what their return on investment is, right?
Oh yeah, the dollars and cents rules the day, and that is predominantly how people make decisions about their real estate.
I agree. And my experience has been no matter how fluffy people make their property sound, at the end of the day, all that really matters is how much is on the bottom line, how much they have to put in, how much they have to get out, and when. Um, and so, what are the most important factors that you bring to the table when you're starting to work with a new client that has a piece of property? Do you come in and start talking about the market analysis, or do you start talking about the constraints, or what really drives your conversation?
Absolutely, I think the place to start is always kind of the macroeconomics, kind of the 10,000 foot view of kind of where is the market today,
Mhm.
what are the trends, what is being developed around your property, what is the jurisdiction that your property's in, how is the city looking at development, is what is the population trends, the demographic trends, and the market fundamentals,
Mhm.
either like sale prices or rent rates, the kind of the leasing velocity or sales velocity of completed units or completed homes, uh, and that's kind of like the kind of drives where is your property stand and kind of the bigger picture of kind of what's happening in the city and the state or in the country overall, really. uh, and then we kind of get into a pro forma, and just trying to figure out like, okay, if you can build this big of a building, what kind of rents you can get, how much it's going to cost, and then get to like a residual land value, at the total value of the completed project, and then you deduct all of the construction costs, all the costs of the studies, all the transaction costs and soft costs to get to a value of the property today, and then how best to go out to market with that property, to position in the best way to find the right buyers for it, um, and kind of launch it with as much information about the property as possible. Uh,
Yeah, and I would imagine there's a sweet spot of like putting together a package for a property with all of these different pieces of information, and then you're trying to. It's not typically these people that own these properties are trying to sell to somebody else that would eventually build it, or somebody else that would entitle it, and then somebody else that would build it, and then somebody else that would operate it, or whatever the case may be. But it's a kind of a long chain of events there, and how often do these property owners understand clearly up front what kind of due diligence needs to be put into selling their property, and where do you see the pitfalls that results in maybe longer time on market, days on market for properties versus others?
there are so many different types of property owners in general, but especially with land. The general categories I see is either it's a farmer, if it's greenfield development that's owned this property for generations, and you know the city is annexing that land, and they want to see kind of a new uh, development heading out that direction, and they may not have any idea about how due diligence looks like or what it could be developed for, and or you might have someone that owns a there was used to be a building on it and burnt down years ago, and the property's just been passed down to generation, and now the grandkids own this piece of land, and they may or may not know anything about the property. Um, on the other spectrum is you have someone that bought a property opportunistically. They saw it was a low price in during a downturn, and they picked it up. Have done maybe some work on it, but don't have not done that much work on it. Now they're looking to capitalize on the uh, development around them to
Uh-huh.
flip the piece of property. And then on the other side is a seller that is a developer themselves that may have gotten the property uh, some time ago, got it entitled, got some approvals, got some plans, but for one reason or another, they're deciding to sell now, and so they may have a lot more knowledge about the due diligence process. So, kind of wherever someone is, like my job is to kind of explain to them that the due diligence that you put into the property today will really set you up for more certainty and a more smooth transaction to attract serious buyers and command top dollar for the property. So I try to work with them to pre-package the deal with due diligence materials to commission the, you know, uh, feasibility studies of zoning, density, CEQA, get a phase one environmental report, a survey from a civil engineer, a title report, utilities map, and then work with an architect to get some conceptual site plans or yield studies. But in today's day and age, figuring out if a property qualifies for a CEQA exemption and streamlining, that goes a really long way.
Yeah, no doubt, no doubt. And that kind of gets into the CEQA reforms that have been recently passed here in California. Of course, this wouldn't really apply to other states except for similar laws like SEPA and Washington, but very important to be streamlining the process. And how often do you see would-be buyers walking away from a deal or coming back with a lowball deal because of the lack of due diligence?
Yeah, it's pretty common. I mean, if you look at a property and you don't know what's on it, or are there going to be any kind of environmental issues, any kind of biological resources or cultural resources, I would say that it's if you don't know what you have, it is kind of a 50-50 crapshoot. So yeah, I mean, I had a project in Folsom, as a matter of fact, and uh, you know, the seller had done some initial studies and had gotten an initial biological report, but there were a lot of holes in it. They got the project approved, and there was a lawsuit from some neighbors because they asserted there were some archaeological resources. So the seller just said, I'm I'm gonna forego my project I'm just going to walk away. I just want to get rid of this property. So then it was incumbent upon the buyer to do all that upfront work. And as a result, they were not willing to kind of put up more non-refundable money. So I think, sometimes sellers really want a buyer to step up and really commit to a project, but a buyer's not going to be willing to do that unless they have that certainty. So the seller can either do it and kind of pave the way for a more successful transaction, or you're kind of putting it on the buyer to do that work. And you're kind of the, uh, putting a lot of more risk in the deal, that they might uncover something that could derail the project, or they might walk away, or they would try to retrade for a much lower price and uh, cause other issues for you and cover something that you kind of didn't want to know about.
Yeah. And in general, it's much easier for a buyer to walk away from a deal than a seller, because the seller still has the property left to deal with after the fact. Um, so that can be a real big headache. So what are some of the recent constraints that you've found on properties that have kind of stalled deals out, and where have you found opportunities?
I would say the predominant constraints have been around construction costs and feasibility, with just the high costs of capital and construction costs, both materials and labor still being really elevated. It's made higher density podium type projects uh, just infeasible in a lot of markets. So whereas it previously may have been approved for that, or it may already have fully entitled project. Well, in a lot of the cases, those entitlements may or may not be of value, because the market just doesn't support the rents and values. So it's just, if you built that project, you'd be underwater. So you'd have to
Yeah.
build something that's lower density, lower cost, like a garden style multifamily or single family project to make it work. And it kind of creates a much lower valuation on the land. So trying to bridge that gap between buyers and sellers, between the ask price and the bid price, has
Mhm.
definitely been a challenge and a constraint. Uh, and I would say just the timelines with getting approvals, getting financing, lining up equity partners, capital providers. It just makes deals take much longer, and buyers who need those approvals, and they need to have those that capital stack lined up before they can close. So sellers want to close quickly, buyers need time, and it's about finding that timeline uh, that works for everyone.
Yeah. How much effort do you typically, with your clients, put into cost evaluations before you put something on the market? Because you kind of touched on construction costs there. And I would imagine that a lot of buyers already kind of know what their construction costs might be, because that's why they're buying the property. But for a seller, I think it's also important, both horizontal and vertical. Maybe even more important on the horizontal, because at least finished lots are a lot easier to sell than nothing. So,
Yeah.
uh, so where do you kind of put the emphasis, and how far do you go with estimating construction costs?
A lot of it is kind of throwing darts at a dartboard and trying to get as close as possible. And I would say, when you first look at a piece of property, you're standing really far away from that dartboard. And you could be really, we're making some guesswork, just based without having plans, without having any kind of clearances. So we're
Yeah.
kind of making some big assumptions. And I think, you kind of learn. So up front, I'm providing kind of market averages, standards, kind of insight and comps from other projects, what other projects are costing.
Mhm.
But you don't really have a firm sense until you have a site plan, until you have a design, and you're kind of going through that costing process with your team. So, and that's the buyer's team, and that's kind of on the buyer. So, uh, it really, so it's a rare case, but sometimes sellers do have a whole construction budget for their project, and they're packaging it to be permit ready and kind of teeing it up for a buyer to take on. And those types of projects are really attractive uh, because it takes a lot of the risk out, a lot more
Yeah.
certainty. So it definitely helps to have that, but not always possible. So sometimes it's yeah, that's why we structure these longer timelines for a buyer to do that work
Yeah.
in the discovery process.
What are some of the maybe the other mistakes that you see sellers making before they list their properties?
Yeah, I do see quite a few uh, red flags with sellers making statements that are kind of fluffing and
Yep.
or just being over exuberant in their marketing, or say, oh, this is a prime development opportunity, but there's really no data to back it up. Or they'll say, oh yeah, this is what you can build, but buyer beware, buyer to verify zoning. Well, that signals that it hasn't really confirmed what are the allowed uses, what's the highest and best use, what's the density, is it truly zoned to do that? Will a rezone trigger CEQA? Uh, and so if a property is being marketed and there's just no mention of those whether it has the characteristics to be eligible for uh, um, CEQA exemptions or streamlining, the red
Mhm.
flag, if there's no soils, no environmental report, that can raise a lot of questions,
Yeah.
and what is going to be required in terms of investigations or cleanup. And so yeah, and if there's and also they'll just say, oh, this property's 40 acres. It's like, okay, well, is that gross? Is that net? What are the offsites? Where's the infrastructure? It's
Access points. Where's your do you need mitigation? Yeah.
exactly.
Yeah. Uh, I would like to touch on the CEQA um, issues that we've been sort of skirting around for this entire conversation, and maybe start with some of the ones that have been in existence for a little while: the Builders Remedy, the Housing Accountability Act, and how you have seen those laws kind of work through, or be how do you see your projects affected by those laws? Because for example, over the last couple of years, the builder's remedy has been one that a lot of builders have gone after. Where basically you target a non-compliant city or county that has not turned in a housing report to the state, and makes them vulnerable for being required to approve a residential project ministerially instead of going through the discretionary board hearing and all that kind of process, including CEQA. So how is that? Have you seen that work its way through your clients? And then we can kind of end this the CEQA discussion with the most recent passage in California here last week.
Yeah, I would say the builder's remedy is uh I would say the closest example would probably be the city of Davis,
Oh,
where it's just a really, really difficult political environment there, with the local community members and the political electeds and the university and the tremendous, tremendous pressure on the housing market. So I think that has really helped shake loose some new development sites that have been recently proposed, that
mhm.
are moving through the pipeline. I think that really kind of helps grease the skids, as it were.
Mhm.
But it's still a really contentious environment. Even if you have builder's remedy, uh, maybe they're not allowed. Maybe it kind of removes some obstacles, but you're not getting any much help from from the city. They're just kind of stepping out of the way to give you a ministerial review, but you're still kind of challenged uh, in a lot of other ways too. So I would say the the secret reforms have come up in a lot of conversations with my clients. Kind of asking, uh, what what projects are now exempt or streamlined with the new reforms, or how does this change my site selection strategy, or how much does this shorten my timelines, and will this help reduce my hold costs? So yeah, so kind of helping to navigate kind of some of those questions.
Yeah. With the most recent bill that was passed by the governor back last week, it's still kind of working its way through final law here, but does give some additional exemptions for infill. One of the biggest ones is increasing the size of the development project from 5 to 20 acres, and also streamlining potentially non-exempt projects to only those factors where might be a significant effect. Like, so, let's say that you have wetlands or biology or something that's an issue. The CEQA review would only focus on those particular things rather than opening you up to all of the environmental factors, which can then lead to a lot of delay and research and planning and that sort of thing. So what I really see is a reduction in time and then less exposure to public scrutiny. Obviously, you're still going to get some pushback from neighbors, but if they don't really have a mechanism like a public hearing or a CEQA review process where they can formally submit complaints, well, then it's a lot harder for them to challenge a project.
Yeah, exactly. I think that it's been abused by a lot of groups. This was supposed to protect the environment, but it's just been kind of, uh, been a weapon uh, that a lot of groups have used to stop development because they just don't like it. They just don't want it. And so it really hasn't really fulfilled the mission to kind of protect our environment, right? And can you talk? I'm just curious about the more like the narrow miss, streamlining and reusing old EIRs. Like, how do those work?
Well, the narrow miss is probably, I think, the most important. That really is. There are projects that would be exempt from CEQA except for one issue, or something. Maybe it's a couple of issues there, but they're pretty minor. And so the most recent reforms basically required local governments to limit the CEQA review only to those particular things rather than opening it up. So if you look at Appendix G of the checklist, not to get too much into the jargon, but you've got 20 different environmental factors that you normally have to review a project for. And so if you have to open yourself up to a discretionary review, where you have to go through each one of these factors. And even if it isn't necessarily a significant issue, somebody could say it is, or require more research or documentation around something like cultural resources, for example. It may not be an issue at all, but all of a sudden now your project is subject to CEQA and you have to do an entire cultural resources assessment and, get SHPO approval on it. That's a big deal, for what? There wasn't anything there, so streamlining for CEQA, and reducing the amount of review to only those things that really matter, and from an objective standpoint, and we've dealt with neighborhood associations coming in and asking lots of questions. And I tell everybody the same thing. Look, we're a planning firm. We deal with objectives. We deal with facts. I'm not going to make something up. So if you want to challenge a project, it should be challenged on its merits. It shouldn't be challenged because you don't like it. So,
Mhm.
and I think that the more that we reduce the amount of review and scrutiny to only those things that really matter, something like a housing project that could be delayed for 5 to 10 years, gets done a lot faster in 2 years or 3 years because they don't have to do as much review. And it's a huge cost for the developer for, preparing those documents, paying somebody like us or an engineer or something to do that. Plus, they have the holding costs on the property for an extra couple of years. I mean, that is substantial, and it could just completely blow your budget to the point where it's just not even worth it anymore.
Right. Yeah, it's extremely challenging to be a developer and take huge risks and when you're kind of facing this uncertainty and time delays and additional costs, it makes a really difficult mission of creating more housing even more difficult. Uh, and I've seen kind of a lot more interest now in development. I'm starting to hear that more investors and capital partners and even some REITs are kind of eyeing California again for development because of this reforms that there could potentially be uh, more surge. I don't. I think a boom would be optimistic in development, but I definitely expect that the experts are right that they were going to see an uptick in development in the coming years. So hopefully that's going to be fruitful for you and me, Chris.
Yeah, I hope so. Yeah, definitely. And I'm looking forward to it. I like giving developers or or would be developers that are builders or property owners some good news and some assuredness. So, I think that the culmination or the message that I feel like we're really ending up with out of this entire conversation is that whether you're buying or selling real estate, especially land where nothing has been built before or something has to be rebuilt, that the due diligence up front and being able to share that with the buyer, with the buyer, is super important to be able to grease the wheels on getting that deal done. Wouldn't you agree?
Absolutely. I think it's the more certainty you can create for your land or your project, uh, the more likely it's going to get interest from developers, from investors, from banks. I think that is kind of the most important thing right now is just kind of increasing the level of certainty and reducing entitlement risk, reducing environmental risk, reducing litigation risk. Just to get to shovels in the ground.
Absolutely. Hey, Patrick, I think those are all the questions that I have today, and I know you got to get on a call here in a few minutes. So, kind of like it would wrap this up. Do you have any final comments or questions that you want to bring up before we end?
Yeah, I just want to appreciate the opportunity to speak with you, Chris, and I think it's really valuable to have partnerships and vendors that are knowledgeable and that have a perspective on the market overall and just all the different housing types and different pitfalls. So definitely look forward to continuing the conversation and maybe we can talk again about in a few months and see how these CEQA reforms actually pan out.
That would be awesome. Yeah, and likewise, I really value my relationships with other vendors. We do what we do, but everybody in the development industry needs each other. That's why we're all here. So, but yeah, great to talk to you, Patrick, and hope you have a great day.
You too. Thanks, Chris.
Yeah, thank you. Bye.